The best stocks to own for 2019. With the way that 2018 wrapped up, many investors were left completely frustrated. Why is there a trade war plaguing the market? Why did I just lose 80% of the money that I invested into cryptocurrencies? I thought they were like buying Amazon at $20 per share. Why is the Federal Reserve so eager to raise interest rates? And finally, what the hell is going on in Washington? Seriously. Despite all the negativity and the fact that we're approaching the tail end of a current economic cycle, the following stocks are all stocks that we own in our portfolio. We believe that these holdings will outperform the market. Our focus is investing in companies with a wide moat or advantage over the competition in their given industry. This doesn't mean that we're telling you to buy a given holding. However, the following 10 holdings fit our criteria for intelligent investing in 2019 and beyond. They are good bets on the future. Our first selection, Microsoft. This holding currently makes up 8% of our overall portfolio. Microsoft is the second largest player in cloud computing and a totally revitalized tech giant under its new CEO, Satya Nadella. The company's primary sources of revenue come from its software, Office 365, Azure, its cloud service, as well as LinkedIn. Xbox and gaming applications and hardware contribute to a small portion of the company's revenue as well. We are extremely bullish on cloud computing, and Microsoft is one of the leaders. In 2 years, we have a cost average gain of 31% on Microsoft. Our second largest holding is Facebook. Facebook makes up about 6% of our overall portfolio. Despite all the negative press that Facebook has received in 2018, we believe that Facebook's moat exists in its network. Facebook not only owns Facebook, but it owns Instagram, WhatsApp, its messenger application, and Oculus, its virtual reality product. Facebook is insanely profitable, and after seeing its stock pull back from nearly $220 per share to $123 in 2018, we feel like the stock has put in a bottom, and investors looking to own the social media giant can do so at a much more attractive entry price. The big question you have to ask yourself is, where else would the advertisers go other than Facebook and Instagram? Okay, perhaps Snapchat, but Instagram has been way more successful than Snapchat at monetizing its user base. We are currently sitting on a 7% gain since purchasing shares of Facebook. The next stock, you're going to love this one. It's a mid-cap stock. A company worth just $4 billion that makes its money off taking scrap wood and making composite decking. The company is Trex. Trex is my baby. You're not going to see another YouTube channel promoting the stock Trex. I guarantee it. You heard it here first. I've owned Trex for some time in my own personal portfolio, and since purchasing it in 2016 with our newsletter portfolio, we have achieved a return of 116%. Composite decks only make up about 10% of the current decks in the United States and last significantly longer than traditional wooden decks. Trex is the leader here. We like this mid-cap. Coming in at number 4, Alibaba, the Chinese giant. Typically known as the Amazon of China, Alibaba's stock was crushed at the tail end of 2018 with the trade war between the United States and China. The trade war will have short-term impacts on Alibaba's profitability, but long-term, we believe Alibaba will continue its dominance in online retail, cloud computing, and financial technology with Ant Finance. We are bullish on Alibaba, and if a trade deal gets reached, this stock will climb fast. We currently have a 47% gain in our Alibaba position. That's pretty good. At number 5, we have perhaps my favorite company, Visa. Open up your wallet, and if you have a Visa card in there, you are contributing to this company's revenue. Plain and simple, Visa is the largest middleman for currency transactions. The world is quickly moving from a physical cash to digital currency transaction world. Visa is the leader here. It's no wonder we have made 76% on this position in the past 2 years. Number 6, Intuit. This is the leader in self-prepared tax and small business accounting software. This wide moat company profits insanely around tax return season. I'm guessing most of you have heard of TurboTax or Mint Personal Finance. Intuit is the company behind that. Our total return in the past 2 years, 86%. Number 7, Can you believe it? It's another software and cloud-based company, Adobe. Adobe's Creative Cloud is the gold standard for web designers, app developers, photographers, and videographers. Even with competitors such as Salesforce and Oracle, we think Adobe is positioned properly for growth moving forward. We currently have a 26% gain since purchasing shares of Adobe last year. Number 8, Mastercard. The investment thesis here is nearly the exact same reasoning for owning Visa. Mastercard is slightly smaller than Visa, but growing at about the same rate. We think both of these holdings can coexist as two dominant players in the industry. We have a 94% gain in our position in Mastercard since purchasing the shares 2 years ago. At number 9, Apple makes up 4% of our portfolio. Maybe Apple hasn't come out with another life-changing product since the iPhone. Perhaps Tim Cook is a good leader, however not a visionary like Steve Jobs. But we think Apple is a tech giant and going to be a leader for years to come. We think Apple will continue to find ways to profit from its massive consumer base. Warren Buffett is a heavy investor in Apple, and he knows a thing or two about investing. We remain long and have a 33% overall gain in our position. Our 10th largest position in our portfolio is AbbVie. If you watch my previous video on 3 dividend stocks for 2019 and beyond, you'll realize that I like this drug maker despite it really being in a bad industry. Humira is the top-selling drug in the world. Despite fears of generic competition, we think AbbVie and its leadership have proven trustworthy. This stock pays a dividend of nearly 5%, and if you count the split, has increased its dividend for 46 straight years. Our total return is 40% since purchasing shares of AbbVie. And there you have it. Those are our top 10 holdings we have going into 2019. We have 26 total holdings, including the new purchases that we made last week. We emailed all of our paid subscribers the minute it happened. I placed a link to our newsletter below underneath the video. My crystal ball isn't working right now, but we think that these holdings will outperform the market going forward. But if we see something that's ugly occurring, and we feel like we need to sell a position, we can always do that too. Remember, never buy and sell based on fear or extreme optimism. Learn to look for opportunities when others are fearful, and look to take some profits on positions when you have a large gain. When the going gets tough, the best question to ask is, does the current event affect the long-term investment thesis behind a stock? If it doesn't, and you think the stock will remain a market leader for years to come, you probably have a good buying opportunity on your hands. Please comment below and let us know your largest holdings for 2019. And thank you for watching. Make sure to share this video and hit the subscribe button.